Hi, everybody. My name is Eric Buchanan. Welcome to the latest edition of Secrets from the ERISA Vault. I'm an attorney at Eric Buchanan and Associates. We are a law firm that helps people all over the United States who've been denied long-term disability or individual disability insurance benefits. We focus a large part of our practice on helping people who have benefits that are subject to a federal law called ERISA, the Employee Retirement Income Security Act of 1974. And we started this podcast a few months ago to help people learn more about this important area of the law that applies to almost all the insurance people get through work, whether it's life insurance, health insurance, long-term disability. If you get your benefits through work, if you get your insurance coverage through work, it falls under this federal law for almost everybody. And on a different podcast, we talked about what the few exceptions are. But for most people, if you have your health insurance through work, it's under ERISA. If you have your life insurance through work, it's under ERISA. So what do people need to know about that? Well, today we're going to talk about life insurance. Life insurance that comes from your work is different than a life insurance policy you just bought on your own. The rules of the policies are often different, and the rules that apply once those cases get disputed are often different. And so I'd like to teach you a little bit about that today. We're going to get into the secrets the insurance companies don't want you to know about how ERISA life insurance works. The reality is that a lot of people have life insurance through work, and for some people, it's the only life insurance they have. And how the insurance companies sell those policies through work is that they sell them as a group policy so that they apply to anybody at that company that signs up for the policy. Usually it's less expensive than the life insurance policies people buy on their own. There's less underwriting, which means the insurance companies don't necessarily make you sit through some kind of a health exam, or if they do, it's not as in-depth as it is if you buy a private policy. But the problem with ERISA cases, with these policies you get through work, is that the rules can be different. Not just the rules that generally apply to ERISA, but the way the policies are set up and the way they're paid for. And sometimes that's a problem. So let's get into some of the common problems with ERISA life insurance. One common problem that happens is if somebody unfortunately passes away, the insurance companies have written these policies in such a way that they can deny claims that people sometimes scratch their heads and sometimes get pretty upset about. And sometimes we have to talk to a widow or widower about, holy cow, that really is an argument the insurance company is making. Well, what are we talking about there? Well, life insurance policies might say that we don't cover deaths if the person is engaged in an illegal activity. Well, if you're out there committing a crime, if you're breaking into a house and somebody shoots you, then maybe you shouldn't get your life insurance if that happens. But what if you're driving just a little bit over the speed limit and you get to a wreck? Is that an illegal activity? What if you've had a couple beers and you have not been pulled over, you haven't been charged with a DUI, and you get in a wreck and die, and the police or the autopsy shows that you're barely over the legal limit? Does that mean you were engaged in an illegal activity automatically? Well, a lot of the insurance companies will try to say yes, and that's the reason these claims can be denied. We've seen that happen not just in car wreck cases, but even in boating accident cases where someone's a passenger on a boat on a lake where you're not supposed to be publicly drunk, even though people drink there all the time. The insurance company tries to say, well, that person was engaged in illegal activity. We've also seen policy disputes where the insurance company tries to say that somebody didn't die in an accident, but died because of suicide, because they were driving too fast or they were engaged in some kind of risky behavior. So those are all fights we get into all the time. And those claims are normally fought in ERISA under whether or not the policy should pay the benefits. And we're used to doing those kind of claims. That's something we do fairly often. If you have any questions about that, reach out to us. But there's other weird stuff that happens in ERISA cases, in policies of life insurance that are offered through work subject to ERISA, that I'd like to talk about. Some examples we've seen, some of the secrets the insurance companies don't want you to know. One problem we've seen more than one time is that life insurance policies have different levels of coverage. And you might have a policy that says, if you become disabled, you get 1 times your salary or 3 times your salary or a basic life insurance amount of $100,000. But if you want to pay a little extra in premiums, you can triple that. You can get $300,000 in coverage. Or some policies will say you can get $200,000 in coverage, but you can triple that up to $600,000, or you can increase it in increments of $50,000. Whatever it is, you can increase it. Well, what we've seen in the past is a widow or a widower comes to us, their spouse has passed away, and they think they have a higher amount of insurance, and the insurance company says, no, they didn't properly sign up for the increase. Well, what do you mean by that? No, we had one example. Just I'm not going to name a name, not give away a client's particular identifiable characteristics, but just the general scenario. So we've seen this actually more than one time. The insurance company has offered this policy through work of, let's say, $200,000, and that's the amount of life insurance. The maximum under the policy you can get is $500,000. Well, we had a client one time, and this is actually more than once, but this is one of the best examples I'm just thinking of right now, who found out he had a terminal illness. And he actually went into his employer, talked to them about it, sent a confirming email that said, I have this blank terminal illness. I'd like to increase my life insurance as much as possible. And he got an email back from the HR department at his employer, or the employee benefits office at his employer, that said, well, the maximum of the policy is $500,000. So our client, actually the husband, our client was the wife later on, the widow, the husband signed up for the $500,000 in life insurance. And sure enough, less than a year later, he passed away. Well, when he filed his claim when the wife filed her claim with the insurance company said, well, wait a minute. Under this policy, you can only increase coverage up to $60,000 without a proof of insurability. In other words, having to do some kind of a medical exam and answer questions for the insurance company. Well, no one told anybody in the family that. No one told the guy who was asking for more insurance. And so then we get into a big dispute. Is that a question of, does the insurance company owe more money because they were paying for the premiums, they were told they had the coverage, or is this a fight against the employer who was acting as an ERISA fiduciary because because the insurance goes through the employer has a role in all this, and if they tell the gentleman that he's eligible for this extra coverage, they confirm in an email that they've signed him up and that he's paying the premiums for the full $500,000 in coverage. Is it the employer that's at fault as an ERISA fiduciary? And so in those kind of cases, you end up having to pursue it against both the insurance company and the plan administrator, which is the employer, which is the fiduciary that made the promise or made the representation that the person was covered. The insurance company will often play the game of sitting back saying, we just accepted whatever premiums were sent to us by the employer. We didn't look deeply into what they were signing people up for. It's not our fault. And some courts even let the insurance companies get away with that, and they only are likely to hold the employer responsible as plan administrator. Sometimes they hold the insurance company responsible too, because the insurance company should at least recognize that if someone has an individual amount of coverage go up that much, that if they're going to get paid the premiums on it, they need to either follow up and ask the questions that they want to ask for proof of insurability, or they have accepted the coverage. That's one argument. And the employer representing, yes, we've signed you up for this extra coverage and this is what you have. That can be an issue where the employer might have some liability. So those are the type of issues that come up. We've also seen times when we have an employer sign somebody up for life insurance and then the employer fails to process the premiums. So in other words, the individual who has life insurance might check the box on the form and start paying the $22 a month or whatever the premiums are, and it's withheld from their payroll. But when the time comes, they pass away, the insurance company says, well, that person was never signed up with us, and the employer never sent the $22 off. Well, who's responsible there? Well, obviously, it sounds like it would be the employer, and that would be a breach of fiduciary duties case. And those get disputed under ERISA. So that can happen at times. Why would that happen? Well, sometimes employers make mistakes. Sometimes employers are having financial difficulties, and one thing they do is they fail to pay the premiums on the insurance that they have for the employees when they are short on cash in a given month. So you got to watch out for all those things. And those are things that we've seen come up. And under ERISA, the federal law that we litigate these cases under, that we have to litigate these cases under because these are employee benefits, there's a big question of, is it a benefit due under the terms of the policy, in which case we sue the insurance company under a certain part of ERISA called ERISA Section 502A1B, seeking a claim for benefits under the terms of the policy, versus it is a breach of fiduciary duties, which is usually the plan administrator, which is the employer giving bad information, giving a promise of coverage that's actually not there, or making some other kind of mistake like that. And that's basically suing the employer because our client is not entitled to the benefits because of their spouse passing away, because they're not entitled under the terms of the policy. Those are issues to be aware of. It's something you need an experienced ERISA attorney to kind of sort through, but those are the issues that can come up. Another issue that comes up in life insurance cases through ERISA when you have your life insurance through an employer is that often these policies can be continued if somebody stops working. Well, if you stop working, you're going on to another job. Maybe the new job offers life insurance. So you're not too worried about it. But you should know that you can ask your employer, can I continue this life insurance by paying the premiums myself? And maybe it's inexpensive and you can have $100,000 or $200,000 worth of additional life insurance that you take with you, sometimes even more. Sometimes it can be $500,000 or $1 million. So if you leave employment, you should ask your employer, can I convert this life insurance to continue this policy? Those are the kind of words they use in the industry to keep that policy in place if you pay the premiums yourself. And what happens if you stop work because you become disabled? Do you want to keep your life insurance too? Well, if you act soon enough, you can also keep the life insurance by paying a small amount of money. And sometimes maybe it's less than $10 a month, and it's worth keeping the life insurance if you ask in time. And so if you stop working because you become disabled, also ask if you can keep the life insurance, and you pay the $5 a month or $8 a month or whatever it is, and there you can keep it. However, there's another secret that a lot of people don't know, which is a lot of life insurance policies have something called an LWOP provision. And that's technical, legal, attorney, insider talk. That's one of the secrets from the ERISA Vault. That LWOP is LWOP and stands for Life Waiver of Premium. Well, what is that? In plain English, if you become disabled and you can't work anymore, one of the things you might be able to do is apply for your company's long-term disability. And that's a separate type of benefit that we help people with all the time. Listen to our other podcasts. We describe that in great detail. Go to our website, buchanandisability.com, and it's all about long-term disability. But one of the other things that an employee offered, so insurance offered to employees under ERISA, life insurance will often have this LWOP, Life Waiver Premium provision, that says if you become disabled, you can keep your company life insurance at the same level without paying any more premiums. All you have to do is prove you became disabled. And so we frequently help clients who become disabled both pursue their long-term disability and pursue the LWOP. Now, we have to talk to them about whether it makes sense to work on a separate contract or not. What we do for the long-term disability case often carries over for the LWOP case, but we appropriate where they have a valuable life insurance policy to help them keep it by showing they're disabled. Where it becomes extremely valuable is if we have a family member come to us and say, my dad, my spouse passed away. They'd quit working because they became disabled. They only lived about 60 days or 90 days or whatever it was. And I just found out they had a life insurance policy. Why can't I get any money under the life insurance policy? And the employer or the insurance company is saying, well, the coverage ended when they stopped working. Well, hold your horses. What if they stopped working because they became disabled? If they can show they became disabled at the time they stopped working, maybe they're entitled to the life waiver of premium, which means they should have the life insurance in effect. And therefore, when they pass away, they do get the benefits. We've litigated that case several times. That's that fact pattern where we're able to show that the person actually became disabled when they stopped working, and therefore they should have been eligible for the life waiver of premium. And hopefully, if our client comes to us soon enough, it's not if the family member, the daughter, the husband, the spouse, whoever it is, the surviving family member comes to us soon enough, we can file an application for the waiver of premium to say that their life insurance should have stayed in effect. If we do that quickly enough, then we have an argument that if they became disabled and they stopped working, that not only did they have life insurance, but they should get paid, the family should get paid the amount of life insurance. So these are all the different types of ins and outs that deal with life insurance under ERISA. There's other stuff people deal with all the time. There's other types of claims. There's reasons for denials. There's some types of policies that are called life or accidental death and dismemberment or accidental death and disability policies that will pay an additional benefit if somebody dies because of an accident. And those are fairly complex cases. We deal with those. And if you have any questions about that kind of stuff, you can also ask us about it to see if we can help you out. The bottom line, if you have any questions about life insurance at work, especially if someone has stopped working due to a disability, wants to keep the life insurance, wants to get it either for free or is willing to pay the premiums, or God forbid a family member becomes disabled and dies fairly soon after that, reach out to us to see if we can help. If the insurance companies are not giving the answers that you like, if the employers are not giving the answers that you like, if it doesn't make sense, reach out to us on the World Wide Web at buchanandisability.com and let us know if there's a way that we can help you, and we will talk to you through your policy questions to see, is there a chance that we can get some life insurance benefits for you under the terms of your policy or the promises that were made by your employer.